Alrighty. Welcome back to another episode of Paris and Baz Cast. The elections are over.
Yep.
We've got new government. And the question on everyone's minds at the moment is what's going to happen to the market? How is the market right now? What's going to happen in the future? So here we are to answer your questions that we've received from our mortgage side of things, from our real estate side of things in the last week or so about what's currently happening and what is likely to happen. It is an open forum, so you are welcome to add your comments and ask questions as we go. So let's get this started. So I think until last week, as we were saying,
discussing the auction clearance rates, 59% last Saturday. Compared to same time last year was
71%.
So the market is adjusting.
Yeah,
definitely. I think more properties will be coming on the market. Buyers are a little bit apprehensive at the moment. Obviously, the cash rate is going up as well.
Yeah.
So there's a number of factors out there that is impacting the market.
Yeah.
Yeah.
Yeah. So as basically what we have seen prior to the election, or actually on the election Saturday, very quiet.
Yeah.
We had the number of people that were coming through the open homes. They were saying we'll see, like it just felt like tomorrow the world was going to end, it's going to change, but we're still continuing on. Nothing dramatic has happened. Obviously, it's business as usual.
Yeah.
Obviously, the promises made by the two parties, they're still yet to go through the official forces in the government, to be debated before they become policy. So there's a number of conversations happening, number of initiatives to help first home buyers to be able to address the supply factors and the demand.
And affordability. But I think
affordability.
Overall, if those schemes do come into play, I think it will further enhance demand, which should technically enhance the price.
Exactly.
Well.
Yes, it's going to be very interesting. Just like before when
the home builder grant was a couple of years ago, the Liberal government was in.
Yeah.
So I think in terms of buying, I think there's never a right time to buy, as we always say.
Yeah.
If you're in the market, I know a lot of clients that have pre-approvals out there that are expiring, they're creating urgency. They want to buy before their pre-approval expires. As the cash rate is also increasing, the pre-approvals will become harder in the terms of the borrowing power will decrease because assessment rates will go up. So what you can borrow with your existing pre-approval will probably be lower in the next couple of months with the cash rate going up. So obviously with pre-approvals in place, whoever's got it is trying to cash in and getting the property they want. And there's a lot less buyers out there at open inspections.
Yeah.
So
but the funny thing is, right, people we're creatures of habit. When we see other people acting, oh my god, everyone's buying, we must buy. You're entering the market when it's competition right now, when there's hesitation from a lot of buyers because they are thinking that they're making the right decision by holding off. The market's going to crash. I'm going to wait until it becomes cheaper. Those that are still buying in this market with less competition, you've got more variety to choose from. Definitely. You can, go for the property you like and be able to negotiate well on that. So don't be put off by the fact that, everyone's not buying, so I'm not going to buy.
And also, if you hold the property for long term, you're going to win at the end of the day anyway. If you look at property price over the last 100 years, if you hold property, you will gain. So
that's right.
Nothing's getting cheaper. Labor's getting more expensive. Materials are more expensive. So construction, I don't see it getting cheaper in the foreseeable future.
Yeah.
So construction costs will be pretty high, I think, for the next couple of years. Inflation is sky high at the moment.
Yeah.
Which obviously they're increasing the cash rate. So it's never a right time to buy. But especially if you're upgrading in this market, I believe it's a great time to upgrade.
Yeah.
Because on those more higher priced properties, you'll probably get a bigger discount.
Yeah, that's right.
You're
buying, you're selling high. And
even if you're selling your property at a discounted price at the lower end and you're upgrading your property, you're probably winning at the end of the day. You're buying and selling in the same market.
That's right.
If you're doing that, you'll win.
Absolutely.
So there's a number of factors out there at the moment. So cash rates are going up. In terms of mortgages, if you're looking at fixing your rate, I would advise to do a rate lock with the bank.
That is very critical. I think we need to explain that a bit more in detail. What exactly is rate lock? Because our clients ask this all the time and they get caught when the time comes at settlement. Exactly. So can you just explain that in more detail?
So that means if you've been offered a rate by a bank, even if your loan's been approved unconditionally, you sign the loan contract at a certain rate. If the rate increases between the approval date and the settlement date, you will get the increased interest rate if you haven't rate locked your rate.
Yeah.
Now there's a fee involved depending on which bank you go to. But a lot of the clients we have conversations with, they'd be hesitant to pay the fee.
Yeah. And then the time comes.
And then if the rates are increasing, obviously you can't do much. If the rates increase, you have to pay
Which
the rate lock fee.
Yeah. So I think it's rate lock is something that in this market, when the rates are going up, you would take the gamble when the rates are going down that, oh, look, I'll just not lock it because by the time settlement comes, maybe my rate is cheaper. But right now, there is more chances of the rate increasing than decreasing. Correct. If you are getting a really cracker of a deal, a great fixed rate, definitely consider locking that rate so you get the same rate by the time settlement happens. Because by the time you have approval to the time that settlement,
sometimes it can be, depending on if it's a refinance, it could be 2 weeks, depending on the outgoing lender with the discharge, or if it's a purchase settlement, normally what's 42 days.
Yeah.
So there's a couple of weeks always involved. So there's an element of risk there. And with the fixed rates, they normally announce it 2 days before, a day before, we don't even know. So you got no option to rate lock it then. So you got to rate lock it when you're signing contracts or at that stage.
Because the banks have independently increased rates multiple times in the last couple of months. So even though the cash rate is at a bare minimum, we've still got independent increases by the banks. So let's talk about fixed rates. What is the cheapest fixed rate at the moment, and what's the cheapest variable at the moment?
It depends on which bank again, but fixed rates are obviously in the threes at the moment.
Threes, that's still cheap.
For owner occupied, the base variable rates are cheaper at the moment, but obviously with the cash rate going up, they're predicting first week of June again. So obviously the variable rates will increase, but the variable rates are cheper than the fixed rates. So depending on your situation, do we go variable or fixed? Variable has offset accounts. Fixed, you don't have an offset account. So it depends on everyone's situation where they feel more comfortable.
Yeah, so you've got to have a holistic approach. But if fixed is more suited to you, you want to be able to do everything that you can to lock a lower rate. Because let's talk historically, a 3% interest rate for your mortgages, that is as low as it gets. Obviously, we've seen lower, but it's as low it's going to get for the next couple of years. So if that is going to work to your advantage, talk to your broker. If you want our advice, or even if you are speaking to someone else and you just want to have another person to run it past, we're all ease for you. Happy to hear you.
So
guys
money is still cheap. I believe anywhere up to 4%.
Yeah,
it's still cheap. A lot of the clients out there, they haven't seen an interest rate rise since they bought a property or purchased property over the last couple of years.
That's right.
They've only seen a rate decrease.
So it's a shock to the system.
So it's a bit of a shock to the system. But look, money's still cheap. So, and I think there's going to be more opportunity in the next couple of months with more properties coming on the market to buy. So if you're a buyer in this market, I think, as they say, cash is going to be king.
Yeah.
So yeah.
And let's talk about some of the ways that we were talking about helping, because right now everyone is feeling the pinch. The cost of living is increasing in every possible way. I was just hearing the news today. From 1st of July, electricity prices are likely to increase by 18%.
Everything's through the roof.
Which is crazy. And again, that's something that you want to have a look at before the 1st of July. Start comparing, because there is competition out there. You want to see what else other people are offering. I'm certainly going to be doing that.
In terms of mortgage repayments, you can look at weekly or fortnightly repayments.
How does that work?
So interest is calculated daily and it's paid monthly. So obviously, the more frequent you make the repayments, the more money you have in the loan, the less interest you'll be paying. So it makes a difference over a 30-year loan term, definitely, if you do weekly repayments. So every little bit does count. Obviously, make sure you have the cheapest rate on the market as well, depending if your fixed rate is expiring, because a lot of the loans will be expiring this end of this year or next year. So that's when the clients will start feeling when the interest rate is increasing. That's when you got to see, have you got the best deal on the market? So do get in touch.
So weekly repayments as opposed to fortnightly or monthly are going to be better off in the long run, given the fact that the interest is calculated daily and charged monthly. And also in terms of your salary accounts, I would, if you've got a variable loan, put in your offset account, because the more money you have in the offset account, the less interest you pay. So look, that's
every dollar is going to count, I think.
And obviously, as we mentioned before, if you've got a fixed rate, you don't have the opportunity to get the offset.
But what you can do, you can have the best of both worlds. You can do half fixed, half fixed, half variable. Depending on your situation again. So you got a bit of certainty and you got a bit of flexibility as well.
Absolutely. Well, guys, this is a live show. If you do have any questions, more than happy to answer them for you. We are going through some of the questions that we have received during the last week.
And also, another thing that we've been talking to clients is there's different markets out there at the moment. So some suburbs are still strong, where some suburbs are declining faster than others.
That's right.
So where it's declining more than others, I would say, is more the new estates, where there's more new developments happening.
Yep.
So the value of the property is more in the build, not the land.
Yeah.
So just be a little bit careful where you're investing. You got to see what LVR you're borrowing at, 80% or 90%. So I think where people are going to get hurt is where they've bought in new estates and they've borrowed 90%. It's going to be a tricky situation. If there's even a 10% decline, they could be sitting at level equity or negative equity.
That's right.
So that's where you got to be careful when you buy.
Yeah. Opinion on market, David Lowe says.
Yeah.
Look, I think we are heading for a quite a significant correction.
I think there could be a correction definitely coming, 10 to 15%. Look, depends on when the cash rate fully reaches 5 to 6%. But I think the market is correcting. But when you look the prices since 2019, the prices have significantly increases. Even if the market comes back a bit
to the 2019 level, you've still
you're
made
still,
money based on what it was from
still
2018, for example.
It's still ahead of the game. To buy or to hold, David asked. Look, now, David, that depends on everyone's situation. But obviously, if I was buying, I would. Look, if you get a cracker deal right now, why not pounce?
And that's what, as we were saying before, as we were saying before, if you've got the opportunity to buy in an area where you're not competing with multiple buyers, because right now, I mean, and in general, what we've seen is people are typically buying when everyone's buying. And obviously that is going to impact your variety of your choice because you are stuck on where everyone is competing. And obviously it's going to put upward pressure on your the prices. But if you are buying and while others are not, it gives you the opportunity to choose and to negotiate hard. So I think right now, even from a vendor's point of view, there is still a mindset that the market is still high. A lot of vendors are still thinking they're going to get a cracking result. Some areas you will, some areas you won't. So what's happening in that regard is that those vendors that are sitting in, because days on market is increasing. That's a fact. Where it used to take within the first open home, it is taking the second or the third. And that's because there's an adjustment in the expectation from the owner as well.
And on the back of that, vendors are adjusting. They think the market is absolutely pumping at the moment. But they do not know what's happened over the last 4 to 6 weeks. So it's a bit of a shock to them. When we to
digest, which is why, right now properties are sitting on the market for some time because the mindset is adjusting. The vendor's mindset is adjusting. Should I accept this or am I going to be able to get a better offer if I wait a little bit longer? And given the feedback and the experience that we've seen, the prices don't typically increase after 6 to 8 weeks of being on the market. People start thinking there's something wrong with it.
And there's no risk gambling in this market as well. If you've got a serious offer on the table, you should take it, rather than gambling for the extra 20 to 50 grand, depending on the price range. You should take it and run and move on to the next transaction. Otherwise, once your property becomes stagnant on the market, people start to think, what's wrong with the property? There's nothing wrong with the property. Why is it not
selling?
It's just not priced right.
Expectations changing. Absolutely. Well, thank you. Thank you for that, David. And in terms of rental, so look, rentals is still strong, but we are also seeing that people are becoming picky in what they're applying for. Some properties that are houses definitely going to have a lot more interest and a lot more applications to go through. But with the properties that are units, granny flats, some of those less attractive properties that a family would consider, that's where people are, we've had multiple inspections for a property, for example, where people are coming through, but they're saying, I want to take my time. I want to see what else is out there and then make a decision on what I do. So from those that are considering buying investment properties, do your research around of what sort of property you're looking for, what kind of area you're looking for, and what the renter profile is in that area. Again, we're happy to help you, to guide you on that, but that's definitely critical in terms of releasing the property, because again, the owner's expectation is that, I'm going to get a lot more. My property is going to get rented out in 1 week. I'm going to get a lot more, but sometimes, depending on the property, depending on the area, it's not delivering the result that it did. So, and the other big news that is in the pipeline, which hasn't yet eventuated, it hasn't yet hit the main media, is the conversation about limiting rent increases to CPI in residential properties. This is a bill that has not yet passed any of the government, the lower and then so on. So it is something that is developing. The our Real Estate Institute of New South Wales is lobbying against that, because I'm sure as a property owner, if you're going to be told you can only increase a property the rent by 2% or 3%, which is a typical range of inflation, it's going to make it less attractive for you to buy. So which means less availability of stock, which puts further upward pressure on the prices. So interesting to see what is going to happen in the rental market. Again, trying to focus on reducing the cost of living, the way that the rents are increasing. There is talks about how we can help the tenants. Agree that we need to have that sort of relief, but at the same time, whatever decision gets made is going to have a flow-on effect on what happens in the appetite for investors of investing in the market, residential market.
But overall, I think the rental market is very strong at the moment. Good quality properties, we're getting a number of applications.
Yeah,
I think the properties that are slightly struggling compared to others are the stock standard properties that need a bit of work. So if you buy a property in the right location, good school catchment, close to the station, you'll always win.
And it is end of May. End of financial year coming very soon. So if you are looking to doing some upgrades on your property, your tax returns are not far long to do. So if your property needs a bit of love, make sure you are investing money.
What people need to understand is when you buy an investment property, it's like a business. So you're investing in property. So you've got to always allow for wear and tear costs associated with the property. So yeah, I know a lot of landlords when it comes to that.
It hurts to spend money, but let's not have that mentality. You are buying a property which is making you money. So it is a business. So just as you would if you owned a shop front, you would be investing back into that property. It's the same thing with residential property.
And the more love and care you give to the property, the better it'll be looked after, and better return in the future.
Absolutely. Well, thank you very much for listening, for tuning in. If there are any other questions afterwards, we're more than happy to answer them for you. And then stay tuned for some of the upcoming episodes. We are actively reaching out to guest speakers. So if you know someone that would be worth for us listening to, or getting their insight on anything to do with real estate or finance, happy to reach out to them. So do feel free to get in touch, and we'll see you guys next week. Tune in again. Have a good rest of the afternoon. Thank you. Bye-bye.